please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Pre-open rates are here. There's a freak rate in ICICI Bank down about 8%. Should not happen like that, but in fact there are a lot of freak rates. TCS up 10%, for example. That's compensating for that move on ICICI. So let's do one thing. Let's wait for these rates to settle a bit. A couple of other stocks which are looking interesting at this point in time. TCS is of course the one which is on the way up. Mahindra & Mahindra is up 3%. Reliance Capital up about 0.5%, ITC up about 0.5%, but really all over the place. Let's see if with the currency opening it's a bit flat, which actually a bit of a bias towards the upside for the rupee. So let's wait for these rates to settle. Manisha is here with a quick roundup of all the commodity market action. Manisha, good morning.
Morning, Anuj. Thank you so much for that. Well, you have the dollar index trading at a 2-week close, and that in turn has been supportive for overall commodities as a sector. And the crude oil prices, while we did see gains overnight, in the Asian markets there has been some pressure. And this is after reports from API which suggest that you are looking at a weekly build-up in US inventories to the tune of 5.7 million barrels, and that has pulled the prices slightly on the lower side. Markets, of course, are looking at maintenance in refineries. That also is leading to build-up in crude oil as a raw material. But on the other side, there is so much happening with South Korea, North Korea, US, the whole denuclearization statements that we saw come in yesterday. So markets would continue to keep an eye on to that as well. And any premium or discount that we have seen building up from these statements also would be seen in prices. At this point, it's nearly 0.8 to 1% of a decline that we are seeing in crude ahead of those US weekly inventory numbers today. We also have seen some strength come back in case of the gold prices, 1.5% up overnight, and we are holding around those 1335 kind of levels in the Asian markets. What is not doing so well really is the base metal prices. We spoke about zinc yesterday and we did see 2.5% decline overnight. Zinc prices are trading at a December low right now. Of course, Asian markets have seen some opportunity buying come right now, but this whole uncertainty about tariffs on aluminum, steel or other commodities is something that is putting an overall pressure onto the base metal prices. So the volumes on an average on a daily basis have seen a bit of a decline, and we haven't seen much of a buying option or pressure come in here.
Okay, thank you very much, Manisha, for giving us all those commodity and currency trends. Actually, the rupee, as Anuj pointed out, has opened slightly stronger, but then it remained a bastion of strength even yesterday. There has been a little bit of dollar weakness overnight, and that's the only thing that's dictating the currency market at this point in time. Thank God for islands of stability. We have enough on our hands in the stock markets. Well, PSU banks have been the focus area for policy, for economists, as well as, of course, for the markets. Former Finance Secretary Montek Singh Ahluwalia spoke to us. He says the time has come perhaps to bring government stake in PSBs below the 50% mark. Listen in.
The Reserve Bank is probably in a much better position to regulate private sector banks than it is to regulate public sector banks. I mean, for example, if the Reserve Bank finds something fundamentally wrong in the management of a private sector bank, it can change the CEO. It can't do that with a public sector bank. The important thing in the public sector banks is to take government ownership below 50%. I mean, the critical thing is if the government owns 50% or more, then the bank is subject to all kinds of rules and restrictions by virtue of government ownership. The government could go down to 30%. It could still effectively control the bank, but it would be, the bank managers would be freed from a lot of procedures regarding recruitment, etc. The public sector banks are actually regulated both by the Reserve Bank and by the Ministry of Finance. Now, in my view, and I've had this for some time, I don't think that Finance Ministry control over the public sector banks is adding any value at all. I mean, I personally feel that, and this has been recommended, by the way, by expert committees. I think the Narasimham Committee way back in 1997 had said that we should take government ownership below 30%, and essentially government can appoint nominees on the board, but they don't have to be government officers. So actually the Department of Financial Supervision, what used to be called the banking division, can even be abolished.
All right, that's the word coming in from Monik Singh Ahluwalia. Let's do one thing. Let's take a look at some of the stocks that are moving around quite a bit. Sadbhav Infra is one. Remember, the company has been declared as an L1 in a big project. So Sadbhav Infra is moving up in pre-opening right now, up almost 4% there. And Amtech Auto, Liberty House has now emerged as the top bidder for Amtech Auto. Remember, it's now overtaken Deccan Value as well. And Liberty House had told us earlier on that Amtech Auto is a strategic fit for them. So this is one stock that's up almost 3.5%. We'll check these stocks with our guests and the view there. But before that, the Teamly stock has not had a good year so far, with the counter losing 15% in the first 2 months of 2018. But Motilal Oswal is positive on the staffing sector, and they see a 29% upside to the stock going forward. And Ravi Vishwanath, the CFO of Teamly, joins us on the phone line for a quick check. Mr. Vishwanath, you are making a mark in specialized staffing. Can you tell us a little bit about that and what this could do to your overall revenues?
The specialized staffing is something that we had told the investors that we would be getting into, over a period of time. This was told to investors at the time of the IPO. Essentially because until very recently we were focused just on generalized staffing, where a large part of our workforce are typically sales, customer support and logistics personnel. There are areas where the businesses use specialized staffing, like IT, like in the case of IT companies, telecom players, healthcare industry, engineering services, hospitality. So these are all some of the areas which are where the margins are much better than what we see in the general staffing business.
Okay.
It was essentially with this in mind that we said that we would be getting into specialized staffing, and we have done 3 acquisitions in IT and 1 in telecom so far, and the results are there for everyone to see.
Okay. Well, actually, if you can extrapolate on those results, Ravi, how will the revenue growth look like in FY19, and how much might come from specialized staffs?
We probably see, I mean, just to give you some indicators, the IT staffing business has gross margins upwards of 20% and net margins of between 12 and 14%. The telecom staffing has gross margins of about 10 to 11% and net margins of about 6 to 7%. Compare that with the general staffing business, where my gross margins are under about 3.5% and the net margins are about 1.7%. So that should give you a feel for how these margins trend in these businesses. And over the next couple of years, I think, given that we are starting off a low base in IT staffing, we probably hope to see, upwards of about 20-25% growth in the IT staffing business, and the same is the case with telecom as well.
All right, Mr. Vishwanath, thanks a lot for your time today. That's Teamly's stocks doing well in pre-open. Amit Gupta of ICICI Direct is with us with some F&O ideas. Before that, the pre-open rates have now settled, and the Bank Nifty is down about 115 points, and the Nifty is a bit flat at about 16 points down. So let's see how markets open. Amit, good morning. What are your top stocks?
Yeah, so see, there is definitely pressure in the market. If you look at the last 1 year base of 10,300, 10,400, so that is finally broken. And before that, we had seen that 10,400 in a single day had seen 20 lakh shares of addition in the short side. And then 10,300 call options. Yesterday, it saw almost 15 lakh shares being added. So on the upsides, I think the pressure will remain in stock specifics. And that is why we are picking up 2 stocks. One is the heavyweight, the another one is the mid cap in the short side. So Reliance, I think, can be shorted for target of around 880, 870. And if somebody is interested in the option segment, then 940 call options can be shorted in Reliance, because that is the highest call base, was placed near 960. The same, like Nifty had the highest call base before at 10,700, and Nifty could not breach that level in this upside and then finally came down. Reliance was also the outperforming stock, and that is reverting from the highest call base of 960, and these positions are coming down now. So it's better if somebody can short 940 call, which is still around 11-13 rupees, And eventually, I think if the stock remains under pressure or dips further down towards 870, these premiums will go off in this particular series. So that is one opportunity one have to play in the short side. From the mid-cap space, PVR is one stock which has remained under, some selling pressure continuously. I mean, around from the month of August 2017, we have seen that whenever it reaches 1400, 1450 levels, there is some, distribution happening near those levels, and finally it starts coming down. The same pattern happened this time also. In fact, what is more negative this time is the recent addition of short positions, which have an average price of around 1380, 1370. So keeping a stop there, I think on upsides around 1300, 1310, one can go short in this stock. It is possible it can dip towards 1200 in the coming days. So there are some stock specific, ideas where one can play short. So here we have the mid cap idea. But we are also going long in one or two stocks because there are certain segments in the market which have remained resilient. So whenever you see 100 or 50 points of upside in Nifty, obviously there will be more recovery in those stocks. So one of them is Godrej Consumer and the another one is IGL. Now Godrej Consumer, from the Godrej Group, if you see, there is more inflows coming into this stock. Otherwise, previously Godrej Industries also was quite active. But once Agrovet is out of this stock, we have seen more flows either coming in Agrovet or they are coming in Godrej Consumer. Now Godrej Consumer is an F&O, and recently we have seen almost 35% of long additions in the current series, and that is why it is holding above the 2017 highs of around 1070. So it declined because of market, but it reverted very fast, and it is still holding around 170, 175 area. I think it is moving up by another $100 in the coming days. It can move towards 1180 looking at this kind of addition, and before that there was a huge short covering pattern. The another one is Indraprastha Gas. Now PNG RV auctions are going to come, and that is why for the city distribution gas, and that is why I think these stocks like IGL, MGL, possibly they are nearing the bottom and they can start pulling up now in this market. So IGL, yesterday also we saw it remain positive despite Nifty coming down so sharply. So it is possible it can move towards 334, 335. So you can initiate your long positions on declines also in this stock and keep a stop near 295, 296.
All right, Amit, thanks a lot for all those trading ideas. 2 minutes left for markets to open. Ashwini, what's your 9-10 call? And also on the index, the Bank Nifty looks like is going to open another 100 lower.
Yeah, I think the downside momentum will continue till Nifty gets to about 10,150, the 200-day moving average. So the early morning could be fairly bad. As far as stock call for 914, I think I would still sell into ICICI Bank. That's a sell with a stop of 300, target of 285.
A one-year chart of Bank of India is almost painful, can bring tears to your eyes. Look at the vertical fall in that stock. Just pull up Bank of India and PNB. The second and third largest bank probably, and it's extremely painful the way in which the stock has broken all support levels and declined. And as our experts say, can fall even further. Well, Ashwini, you keep pointing out that 10,150 is the kind of Plimsoll line we should be looking at in the Nifty. What would that line be in the Nifty Bank?
That line has been broken in Nifty Bank. That was around 24,750. Okay. So now Nifty Bank, the weakness is accentuated and it will lead on the downside. Nifty 10,150 will give you that tradable bounce for people who want to go long. That's all.
Adani Group stocks also under pressure. Adani Enterprises, Adani Power both down. So Darshan, anything else in the mid-cap space that catches your eye this morning?
Well, yeah, it does. Oro Pharma should be considered as a buying opportunity. That stock was stable yesterday and is giving a bullish pattern. And a short sell in LIC Housing is still justified.
Okay, LIC Housing. Actually, NBFCs, there are mixed views coming in. Mitesh, any views, housing finance in particular? I think it was Morgan Stanley, was it, which was speaking about underweight in Indiabulls housing as well. Any thoughts in any of the NBFCs, especially housing finance, Mitesh?
I think, while till yesterday Canfinum Finance was kind of looking stronger, I think a couple of stocks broke down, and DHFL is